All right, good afternoon, everyone. Today is Monday, October 22nd, 2012. Let's start out with the results. Today was, I think it was our first down day this month. We were up 9 ticks on the Russell, started off just fine. We took an NQ trade. We ended up getting out of the NQ trade with 3 ticks loss. We took a Crude trade. We lost 8 ticks on that. And 7 ticks on an ES trade. So we're down 7 ES, down 8 Crude, 3 NQ, and we were up 9 on the Russell. So we had kind of a rough morning. I missed a bunch of trades that would have obviously brought me well above even. But those are the trades that I took. Now I'll go over everything. All right. Let's start here with the ES. Okay. This was our first trade this morning with the ES. I want to just show you what it was. We had a lower swing pivot over here, all right, and price went up right through the BBC, and I shorted the yellow brick road up here to pull up to the red area. It stopped me out. It went through my stop by about 3 ticks, and then it went in the direction I was anticipating. This morning we had drawn in this trend line right here at about 10:15, and that trend line stayed intact pretty much all the way down here to the end of the morning session. All right, there was another opportunity in here to short the morning session, but I didn't want to. It was right here. I didn't want to take that trade because the markets were very choppy until we actually broke down below these levels. All right, you can see it came back up here, hit a red area again, and we could have shorted that again, and that would have worked out, but we did not. All right, that was our morning session. Now I had drawn this trend line in at the end of the morning session, and I said when we get down closes below that, that should open the door to lower prices. You see, we are just getting those down closes, and the price is dropping. I would expect it to get down here, 14.22 and a quarter. Okay, look for that. That was all of that. Now over here on the YM, at the same time I drew that trend line there, I drew this one over here. You see, we just got to close below that. I would anticipate that going lower as well. We had the same type of scenario this morning. I had drawn this trend line in. The thing with the YM is it did get on the other side of it here, but it kept going down. It pulled up over here, and I said when we closed below that, that should open the door to lower prices. It did. I didn't draw one right here. I could have drawn a trend line right here. Oh, I did. What am I talking about? I did draw one. I drew it this way. And that's what we're looking at right now. All right, on the NQ, I'll take you back to the trade that I actually took this morning. Let's see, right here. All right, we had a bearish cross, a pullback and test of the BBC with a down close and some bearish divergence. I missed the first one. I took the second one, but by the time the second one actually filled me, the cycle was going up. So I took the trade off with a small loss because it filled me when the cycle was going up, and I don't like to take those trades. Now you can see all the highlighted areas were other opportunities to trade in here, and there were more than that. Those are just the ones that I managed to highlight in the live trading room this morning. All right, let's see, right here it went right through there. What we would have looked for here, anticipated a lower pivot after we got a red area here, anticipating it bouncing off the red area and giving us a lower swing. It gave us a lower swing, came back up, and went right through it on that one. Okay, over here we're looking for it to bounce, well, from this one, looking for a higher high. Without the higher high, we're not anticipating that this would hold, and it didn't. This one here, we were anticipating it would hold because it was the first one, and it did. Well, for the most part, it did. It pulled through it just a little bit, but it did drop down. Let's see. This was a congested area in here this morning where I had said we could fade it down here to the BBC, then go long the BBC up to the yellow. I wasn't sure what was going to happen after that. Well, I had a pretty good idea that the yellow would hold, but I wasn't sure that the yellow would hold because we're anticipating a lower low. After getting the red over here, we're anticipating that we're going to get a swing low below there. All right, that didn't happen until down here. Once that happened, then we're anticipating it would happen again off of this one. It didn't. Well, not immediately. If you got into this with 2 points risk on it, if you got into this with 2 points risk, let's say you got in at 77.25, it pulled up to 78.75. If you had 2 points risk on it, or 8 ticks like I always use, then you would have worked out okay on that. Frank said it looks to him that when you get 2 candles, it's better. Okay, there's an argument for having 2 candles. You know, getting the down close is basically what Frank is saying. It comes back up, tests the yellow line, and then you get the down close on the second candle. And that's where you would get in. There is an argument for that. There's an argument for that on the yellow line regardless of the color. Okay? If you do that regardless of the color. In this case right here, that wouldn't have done any good for you. It still would have gone right through. You would have had a chance to move your stop to break even in this case if you would have just bought the blue area. But there are going to be times where that works out to your advantage and times where it doesn't. I would say that is a more conservative way. You're going to lose a lot of the opportunities that come along like this where it hits it, and you could short it right there and gain an extra 4 ticks on the trade. Those 4 ticks add up. Okay. Just a thought. There are going to be a lot of opportunities where it just comes and taps it with a single bar. Like this one, for instance. Or maybe, this one right here. I don't know what day we're on or what time frame we're on now, but right there. There are going to be a lot of places where it just touches it with a single bar. The wick is going to hit it. And in that case, if you were waiting for 2 candles to touch it, you may be missing the trade altogether. But not to get aside. Okay. Let's see. Let's jump over to gold. I didn't take any trades in gold this morning. It was pretty choppy early on. There were a couple of opportunities. See, all of this area right in here, I just didn't want to get involved in this. It was just really messy. You could have bought off of here. Looking for a higher swing. We didn't get it. We had this lower. And we had this declining tops, or lower tops. So I had a trend line going down. Could have sold off of here. Could have bought here. It was just messy though, so I wasn't really even looking at gold this morning. This one obviously went right through. We had bullish divergence to test to the BBC with an up close right there. You could have gotten long. It didn't put in a higher swing. You wouldn't have anticipated this to hold. This one right here, pull back to the BBC with a down close. You could have sold there. Bearish divergence, and that actually happened during the break. That was gold. Let me bring the Russell over. Now, the Russell I took a trade on this morning as well. Let's see, right over here. It was my first trade of the morning. We pulled down to the BBC right here. I mean, not the BBC. We pulled down to the yellow line right here in this blue spot. And I bought it right there, and I was looking for it to close up here. I had taken my risk off by the time it got up here. And once it closed up here, I just took some profit. All right. It didn't put in a higher swing, so we weren't anticipating this area to hold. Not for a big move. It did give the 1 bar's bounce. It dropped through there. Once it dropped through there, I was saying you could short down below this level here. And it dropped. And there was another opportunity right here. Okay. Over here, once it moved to the upside like this, I had said you could buy on a close above that level right there, which would be right in here. And that moved up nicely. Tested the BBC with an up close there. It didn't make it up to the swing high. Pretty close, but not quite. This area right over here, I was thinking you could sell below that, sell closes below that area. It pulled back up and it tapped the red area right up here and moved down off of it. If you did sell that and you didn't take profit here and you stuck it out through all that, you managed to get a pretty decent profit on it. But if you sold this right here, then you got stopped out on the way up to that. You would have gotten your money back right away, but nevertheless, you would have gotten stopped out in there. Let's see. Over here, once it broke down below this level here, I'd said a close below here, you could have sold for the move down. And that's pretty much it. There's bullish divergence in here, but that brings us into the break. All right, that was crude. I'm sorry, that wasn't crude. That was the Russell. This is crude. All right, crude oil. Crude had some pretty nice moves this morning. I took this short trade right over here, and I got out of it at break even. I'm not sure what made me get out of it at break even, but I got out of it at break even. I think once I did move down here to the MA1, I had moved my stop to break even, and it got me out at break even. You can see it did end up going down, and there were a couple more opportunities in here to short the crude. Could have bought it in here, sold it right there, bought it right there, sold this move down below here. I did actually sell it over here. Looking at it now, okay, right here is where I sold it, but look at the cycle. The cycle was going up. I shouldn't have been selling it right there. I should have waited for the move up there and sold it up there, but I sold it down here. I should have been selling it up here for the fade down to the BBC. Then you could buy the BBC because you have bullish divergence and bullish cross. Tested the BBC with the up close, and it went up, and it did it again there. Let's see, over here, you got your full 1 bar movement off of that, but you didn't put in a higher swing, so you weren't anticipating that it was going to hold very long here. It dropped right through. You could have sold right over here, and pulled back up over here, and again here, and that was the end of the morning session. And that was crude oil for us today. All right, let's see. I want to look at this one, soybeans. All right, now early on when the soybeans opened up, we had, Dwayne and I had each put some numbers out there. I think Dwayne had said 38 and 55 were his numbers, I believe. And you can see it never got down to the 38 number, and it never got up to the 55 number. So Dwayne's numbers never got hit. I had said look for some significant movement once it gets down below this 44 level. It did drop, well, when I said that, after the open, when I said that, there was an opportunity to short it right here. It dropped about 7 cents, which is the equivalent of 7 ES points from that level right there. All right, once it dropped through this 44 level, it dropped another 5 cents, I think, right, down to 39. Just about another 5 cents down to 39. Once it did that, it turned around, came back up. There was an opportunity to get long right here. No higher swing in that, so right here wasn't looking as good. Once you did put in a higher swing, you had some bullish divergence in the test of the BBC. This was during the break right in here, but could have gotten long right in there. Right here, the cycle's headed down, so it's not that interesting. Again, the bounce off of the blue area right here. Didn't put in a higher swing, so you're not anticipating this one over here is going to hold. Now it's pulling back up to test the BBC with some possible bearish divergence. All right, those were the soybeans. The euro was stuck all around the weekly trading zone this morning, so we really didn't look at the euro this morning. And that was that. If you have not taken a free trial with us and you want to take the free trial with us, in the free trial you get 5 days in our live trading room. You get access to everything you see in here. You know, we'll send you an email with a link that shows you how to download everything that you see in here. You get access to all of it for 5 days, the trading platform, the data feeds, our indicators, and you get to sit in our live trading room and ask all the questions you want so you can learn how to trade it. All right, that said, you go to www.cfrn.net/applied to apply for that free trial. All we need is your name and your email address. All right, guys, that is it.